Hi, I'm Brandon with the Apex Realty Group at Real Broker, and today I wanted to talk to you about the market stats for this week, the 21st of March, 2023. So we always like to go back 6 months in the past to help establish our market trends. On this column, you'll see the price ranges that we have. They're broken down into $25,000 increments. So if you look at this 175 to 199 price range, it tells us that there are currently 6 homes on the market in that price range, and there are 5 under contract. So when you get 5 under contract with a total of 11 homes on the market, that gives you that 45% pending ratio. And we like to see at least a 30% pending ratio for sellers to see that homes are moving in that price range. When you see this number, it says months of inventory. That says, assuming no new homes came on the market, it would take 1.36 months for these 6 homes to sell off. And that's going to be based on days on market for homes that sold. The National Association of Realtors will tell us that 5.4 months is what's considered a balanced market. So anything less than that, you're trending towards a seller's market. Anything more than 5.4 months, you're trending towards a buyer's market. In this price range, in the last 6 months, 1 home failed to sell. It expired, it withdrew, it didn't sell. 15 homes did sell in that price range in the last 6 months. The average original list price was $201. At $201, they reduced it to about $191, so they came down about $10,000. And then at $191, they sold it at about $186,000. So the list price that they were at, they came down another $5,000 in order to achieve contract. That gives us a list price to sales price ratio of 97%. And again, that's the number that it sold for versus what it was listed for, not its original sales price. So a lot of times with this number here, when I'm talking to sellers, they see this number, they're like, I'm going to get 97% of what I'm looking for the house. And that's not an accurate number. What that tells me is you have a 3% margin of error in your pricing. Homes that sold in that price range stayed on the market an average of 36 days, and the homes currently on the market have been on the market for 155 days. So I would expect to see months of inventory start to come up. And then, if you look at this 12 months of inventory, a year's worth of inventory in that price range, really, but our data size is small, right? So we only have 2 under contract and 1 on the market, and that one that's been on the market 248 days. So there's probably something wrong with that house. Again, it's not something that I want to run for the hills on. I don't even like to get too in the weeds with individual price ranges. What we can do is I can scroll down a little bit and we can just look at the Fairbanks market as a whole. So there's 81 homes on the market, 81 under contract. We've got a sweet 50% pending ratio, 2.17 months of inventory on the market. Again, meaning if no new homes came on the market, it would take about 2 months for that current inventory to sell off. 39 homes failed to sell, 352 did, so that's kind of awesome. That's about 2 a day. Average original list price in Fairbanks was at $297,322. They reduced that price down about $10,000, and then they sold it for about $5,000 less than that. So again, they have about a 1.7% margin of error. The homes that sold stayed on the market an average of 33 days, and then the ones that are currently on the market have been on the market for 94 days. Now we can go over to North Pole and take a look at those stats.
Thinking about moving to Fairbanks? Well, click on the link below for my free relocation guide where I talk about top schools, top neighborhoods, and so much more.
All right, so coming back into North Pole, we just kind of want to hit the meat of the market here for you. That $300,000 to $400,000 price range, that seems to be where most of the activity is taking place. Again, very low months of inventory. Above 400 though, that again starts to bump a little bit. But there's only 2 homes on the market between 4 and 425. 425 to 450, 3 and 3. So you got a 50% pending ratio. So of course that's going to even out just a little bit. Again, not a huge sample size. Only 2 homes. Can we really make a trend out of that? I don't think so. But me, the market's looking pretty good here. Sub 2 months of inventory, not a lot of expired, tons of homes sold. And then if you come in and look, you've got about a $7,000 reduction there. You have a $14,000 reduction there. You have and don't check my math. If my math is wrong, you can definitely leave me some comments below and tell me how my math is wrong. I'm just kind of doing this in my head. And then again, about a $5,000 reduction there. List price to sales price ratios are strong. And then I would say if you're in the meat of the market in North Pole and you've been on the market longer than about 45 days, you need to start thinking about doing some price reductions. Let's go ahead and scroll down. and look at North Pole as a whole, 49 on the market with 78 under contract. So the pending ratio is quite a bit higher in North Pole than it is in Fairbanks, even though the numbers are smaller because Fairbanks had 81 and 81. Inventory is about 1.5 months. And again, our average original list price is higher than it was in Fairbanks, reduced down $10,000. And from the average original list price, they had to knock off about another $5,000 to get that contract accepted. So you still got about a 2% margin of error or a 98% list price to sales price ratio. And average days on market for homes that sold was 42. And then the current homes on market are 76. So we're starting to see those higher interest rates really start to add to our average days on market. If you have any questions for us, you can email me, Brandon at apexrealtygroup.info. You can email Justin at apexrealtygroup.info, or you can call us at this number, and we'd be happy to talk through any particular price points that you would like to.